Fed Governor Quarles is sounding more bullish on stablecoins, saying, quote, "In my judgment, we do not need to fear stablecoins. The Federal Reserve has traditionally supported responsible private sector innovation. Consistent with this tradition, I believe that we must take strong account of the potential benefits of stablecoins." I want to now bring in Jeremy Allaire, co-founder, chair, and CEO of the digital currency company Circle. Jeremy, thank you so much for joining us. What do you make of Fed Governor Quarles' remarks there? What's the big takeaway?
Well, I thought it was obviously very, very positive for the continued rapid development of private sector-led innovation in the digital currency space. I mean, we've seen years of innovation from public blockchain infrastructure, which are really the building blocks for how we can bring financial market infrastructure and currencies onto the internet. And we've seen dramatic growth in dollar digital currencies like USDC. And I think what I read from those comments was the private sector is innovating very fast. There's a history of private sector electronic money. That is, in fact, the history of electronic money innovation in most of the world, including in the United States. And that the Fed and the government as a whole should be thinking about not just research projects into digital currencies, but how to take something that's not just aspirational, but that's already operational, and make sure it can be run in an effective way, ultimately to the benefit of people and businesses in the United States.
So give me the case for a digital dollar.
Well, I mean, I often get asked the question, what's the use case for USDC? And my answer is, what's the use case for a dollar? The incredible thing about this is what we can do is we can take that durable, reliable dollar, which inherits obviously from the underlying safety and soundness of the Federal Reserve and the fundamental monetary policy of the United States. And we can convey onto that dollar the superpowers of the internet, the ability to transact instantly, globally, both peer-to-peer, with businesses, at the speed of the internet, with very, very fast settlement finality, and at a fraction of the cost of the way electronic money moves today. And so you're really just bringing true digitalization to the currency itself. There are many, many other benefits that extend beyond that because of the programmable nature of money that exists on these blockchains. But fundamentally, you're just taking the power of the internet, conveying that onto a dollar, and making that widely available to everyone in the world.
How much interest are you actually seeing from corporate treasuries to invest in stablecoins like USDC?
Well, it's been a fascinating phenomenon. We've seen just in the past couple of years pretty dramatic growth in these sort of borrowing and lending markets that have built up around stablecoins like USDC. And so you're starting to see essentially institutional quality lending markets and yield products that are built on those. We recently introduced something called Circle Yield, which is specifically targeted at corporate treasurers, and financial institutions, and others. It's actually remarkable the number of traditional businesses that are looking at ways that they could allocate capital in a responsible manner into these stablecoin-based lending markets. And so I think that's a phenomenon that we've begun to see, and I think it's a phenomenon that's going to grow pretty dramatically in the next couple of years as these digital asset markets continue to grow as well.
That said, I know these comments from the Fed governor are what we wanted to hear, what you wanted to hear, I should say. However, if you look worldwide, the increasing crackdown that seems to be happening from China to the UK, and even in the US, where we're still waiting for approval of a Bitcoin ETF, it's not happening right now. And I wonder how big a risk that is, and if you really believe that regulators will, in the near term, come on side, or if this is going to be a years-long process.
Well, look, as someone who got started in the crypto industry 8 years ago in 2013, when people talked about regulatory risk and uncertainty, let me tell you, it was a very different world then than it is now. Where we are now is that crypto is a $1 trillion plus infrastructure. It has an incredible amount of innovation and investment happening behind it. Major financial institutions, major corporations, major internet companies, all building up around it. This is the next logical infrastructure layer of the internet, and it's happening. And what's notable about the regulatory engagement, I don't view it as a crackdown. I view this as an engagement, as something becomes, sort of at internet scale and impacts billions of people. Absolutely, you're talking about financial instruments, you're talking about the financial system. Of course, you're going to have regulators that want to understand it, that want to make sure that fundamental risks, whether those are crime risks or safety and soundness risks, consumer protection risks, that these are all taken into account. And that's the job of regulators. So I don't view this as a crackdown. I view this as highly constructive engagement all over the world as this industry becomes a massive industry.
So meantime, I know you're focused on CBDCs, but what about the altcoins out there? Is there anything that particularly strikes you as fascinating, as encouraging, or do you see a lot of risk?
Look, investors beware if you're looking at any given crypto asset. What I would say is there's an incredible diversity of forms of crypto asset innovation, from digital commodity money like Bitcoin, digital commodity money like Ether. Decentralized finance protocols and projects are incredible in terms of what they're introducing into the world. Those types of digital assets have grown quite significantly over the last year, and I believe have a long way to go. And then we're seeing, novel new forms of innovation in crypto assets, where we see things like actual intellectual property and digital content becoming crypto assets as things that people can purchase and trade and the like. And so we're at the very beginnings of what I think will ultimately be a world where there's millions of different digital tokens that people are interacting with in everyday commerce, and certainly from an investment and capital markets perspective as well.